That's right. It's right now. Good morning, everyone. Good morning, Chamberlain, Malpe, and Ayo. Well, welcome to this side of Sunrise Daily. This is Business Morning on Sunrise Daily, and it's time to do business. It's a big day for Nigeria today. The MPC meeting is top on the list, but let's go around the world and get back to what's going on right there. Starts with global oil prices that mostly held on to gains made a day earlier amid attacks on shipping in the Red Sea that have exacerbated supply worries. Looking at the prices right there, it's red for Brent, which is good and bad for Nigeria. Deciding on what side you're at the moment. $82.70 for a barrel, 0.21% down, up. It's gained right there. Sorry, cut from the price. And then WTI is $77.77. I wonder if that means something. $77.77 after it gains 0.24% for this morning. And looking at the factors that are driving it, the attacks obviously still there of Iran-allied Houthis in support of Palestinians have increased freight rates and shipping times. On Monday, United States Central Command said that the Houthis had unsuccessfully fired a missile at the U.S.-flagged oil tanker Tom Tor in the Gulf of Aden. On February the 24th, U.S. President Joe Biden has said that he hopes to have a ceasefire in the Israel-Hamas conflict in Gaza start by next Monday. Wouldn't that be a relief? Well, in public, Israel and Hamas continue to take positions far apart a possible truce while blaming each other for delays. Both oil benchmarks settled more than 1% higher on Monday, which followed declines of 2 to 3% for the previous weeks as markets factored in greater likelihood that rate cuts might take longer to come. That is in the United States and not in Nigeria. Now, still in the global space, what's in grains now? Chicago soybeans gained more ground on Tuesday, rising almost 1% as the market was supported by short covering and expectations of lower outputs in Brazil, although ample world supplies kept a lid on prices. We look at the prices there. Soybean gained 0.92%. That's really high, getting close to 1% there. Price $11.55. That's for 3/4 of a bushel. And agricultural markets, including soybeans, corn, and wheat, are being underpinned by bargaining, buying, and covering of shorts after suffering losses in the beginning of the year amid plentiful supplies. And then we see, apart from soybeans, we do have right there corn. Corn also rose 0.1%, $4.22 for a bushel after it went up 2%. We also look at wheat. Wheat also gained. It gained 0.4% to $5.77 for a bushel. Commodity funds are net buyers of CBOT corn, wheat, soybean, soy meal, and soy oil futures contracts at the close of trade on Monday. Well, let's come back to Nigeria now. It's a big day for Nigeria's economy. Because first there starts a cost of living crisis, which we see the NLC taking to the streets. I think you've heard enough of that from Sunrise Daily. Even had that conversation with the NLC president who is on the streets and from different states. So now let's go to the other big thing in Nigeria today. That's the MPC, the first under Mr. Layemi Cardoso. They started the meeting yesterday, and we expect to get the decision today. You shouldn't miss Business Incorporated starting from 1 to whenever the president, the governor of the CBN is done with the announcement. This is where to stay. But for this morning, let's look at some of those factors ahead of the MPC, the meeting, as they consider their decisions. And to do that with us is an economist, Mr. Joining us, Mr. Tilewa Adebajo. He's the Chief Executive Officer of CFG Advisory. Joins us virtually from Lagos. Mr. Adebajo, good morning and thank you for your time.
Good morning. How are you this morning?
I'm great. Thank you so much. So it's just a couple of hours. In fact, I think they started the meeting at 8 a.m. this morning. So as we speak, they're not watching or listening to us. They are very busy. What do you think they are talking about at this time, the MPC?
Well, number one on the agenda is inflation. Inflation has reached a high of 30%, and food inflation is close to 36%. Number two will be the foreign exchange. We have significant challenges with the foreign exchange in Nigeria. There's no doubt about that. And I think the central bank is at the forefront of this with its new market-driven foreign exchange mechanism and the volatility of the naira, which has gone into free fall in the last week. That's number two. Then number three, what are your plans for growth? That's been very important to say. And then, of course, the central bank governor has already told us that they're targeting 21% interest rate, inflation rate by year end. So then the big elephant in the room is how much are they going to increase the MPR to be able to reach their inflation target of 21% by the end of the year. So I think that is really what everybody's looking to. How much is this rate increase going to be and what they intend to do about the foreign exchange system?
Some people are projecting about 200 basis points increase on the MPR. What do you see?
Well, last year, let's take a look at what happened last year. Last year, the whole of last year, on a gradual basis, MPR was increased by a total of 725 basis points. MPR has not gone up by for a long time. It's still at 18.5. Inflation is at 30%, according to official figures, but closer to 35% in reality. So what you are seeing is that we have a situation in Nigeria today whereby the gap between the MPR and the inflation rates is quite wide, and real rates are negative, and that's why we're changing foreign exchange. So if you also take a look at the money supply data, in 2022, just 2 years ago, money supply was about 40 trillion. Today, in January, it's 93 trillion. So it has more than doubled in 2 years, and it went up by 40 trillion alone between January last year and January this year. And of course, most of that is now because the ways and means, the 30 trillion, has now been reflected in the money supply data. So that is a significant amount of funds in the system that is chasing all kinds of things, including the dollar, because, you know, real rates and real yields are negative. So my own expectation is the fact that there needs to be at least a minimum of 700 basis points increase in interest rates from 18.25%, which is it is right now, or 18.75%, to at least 25%. In order for us to stem inflation and try to cool off what's going on in the environment today. That will be the minimum, in my own opinion, if you're going to achieve reducing inflation by the year end.
Well, I must tell you, Mr. Adibajo, that's the highest I've heard, because, you know, they also have to deal with the balance between causing a stagflation in the economy and also mopping up inflation. And when they go as high as 700 basis points, what do you think will happen to the real economy?
Well, we need to go through a period of adjustments. You can see that inflation is causing a lot of problems. Food prices, everything is going up. So you need to stabilize the economy on the short term, maybe within the next 6 months. And then, of course, once you stabilize, you can start bringing down rates. Nigeria is already in stagflation. Our growth numbers for last year was only 2.4%. So I think we understand that. So it's also important that we send a clear signal. Otherwise, your exchange rates are going to continue to go haywire. And, you know, it's clear that this new exchange rate mechanism has not been able to take hold because of the volatility. So I think the only way we can stem the tide now and reach price and financial stability, which is the core mandate of the Central Bank of Nigeria, is for us to increase interest rates by at least 700 basis points.
What about the notion that a major factor driving inflation comes, you know, from the fiscal side? And so even if you do increase MPRs, it may not reflect in dealing with inflation.
Well, you've raised a very good point. So the central bank also needs to advise the fiscal authorities of their own impact. Both the Minister of Finance has said they're going to audit the ways and means financing of the 30 trillion. And the central bank governor has made it clearly that there's no more room for ways and means financing. So I think that has been clear. So if the government stops that and they implement this Onosoi report and they get into some clear amount of fiscal discipline over the next 6 to 9 months, then we'll begin to see the results. There's no doubt about that, that we'll see the results. And these are the things that we need to do on the short term. Now, once we're able to achieve stability, then we can begin to cut rates. It's not rocket science. You can see now that in the Western markets, both the Federal Reserve Bank, the Bank of England, and the European Central Bank, their challenges now is after they've gone through a year of rate increases, and they've been able to cut inflation by at least 50% on all three fronts. What they're now saying is rate cuts is now a question of if, not when. It's not, it's a question of when they're going to cut rates, not if they're going to cut rates, because they're being cautious now to make sure that things are cooled down before they cut rates. So their own interest rates are now going to be on the downward spiral. There's no doubt about that. The signaling is clear. So they just want to make sure that everything is stable before they begin to cut rates. So we should follow that amount. So you go through a period of tightening. You have 93 trillion naira out there in money supply right now. That's a hell of a lot of money. You need to tighten and, take control of that money supply. And, on a short term, 6 to 9 month frame, after that, we can now begin to ease our rates to be able to achieve growth. And let me tell you something, Nigeria has done this before. In 2011 and 2014, Nigeria's economy grew in excess of 8%. At that point in time, inflation rate was between 11 to 12%, and interest rates were between 12 to 15%. If we achieve those parameters, I have no doubt, historically, it's been proven over and over in Nigeria, if you have those bands of, if you can keep inflation and interest rates to those bands I just mentioned, we will achieve in excess of 8% growth or more. So, it's not rocket science. The historical data, the regression analysis proves all these things. So you need to stabilize the inflation and reduce interest rates eventually to be able to get some sort of economic growth.
All right. And you don't think that the efforts at the fixed income market, we've seen attractive yields there. You don't think that can, contribute majorly to it, mopping up the money?
Well, if you talk to any investor in Nigeria today, and the reason why everybody's changing foreign exchange is that the yield curve is negative. You see, on the longer term instruments, inflation has eaten out the yields or the returns on those rates. So the OMO bonds that they've been starting to introduce is beginning to place, they're introducing bonds at an interest rate in which they're targeting inflation to be. So the challenge is that if I'm going to invest in an instrument today, can you assure me that if I invest in an instrument at 23%, can you assure me that in a year's time, inflation will be 21%? That is what you call confidence. If we have the confidence in that market, then you will make that investment today knowing that the central bank will be able to reduce inflation so that you can make a return. Nobody wants to make a loss. And as long as the yield curve in Nigeria remains negative, because inflation is higher than interest rates, real yields, real returns are negative, people will continue to look for alternative assets, and which is now foreign exchange.
All right, thank you so much, Mr. Debajo, for that 700 basis points. Well, we will watch and listen and see if the MPC can do 700 basis point hike on the NPR. Thank you so much, Chief Executive Officer of CFG Advisory, for your time and thoughts.
Thank you.
All right, now let's go to Reading and continue this conversation with senior analyst with FDC Financial Derivatives Company, Dr. Adesola Sumoni. Been a while, Dr. Adesola. Thank you so much. Good morning. Okay, I think we'll have to wait a bit for him to join us. And let's see how many basis points he thinks that the MPC can hike rate today. Dr. Adesola, are you there now? Can you hear me?
Yes, I can. Good morning, Ini.
Good morning. So, Mr. Debajo just is looking for a 700 basis point hike on the NPR. What are you looking forward to?
Thank you for that question, Ini. I think at this moment, like you mentioned, there's need for bold action. And if you ask market watchers, we're expecting anywhere between 200 actually to around 250 basis points increase in benchmark interest rates at the meeting later this afternoon.
So the Naira gained yesterday, a good one. I mean, appreciated by 8.13%. Even though, yeah, we're still far away from our dream, but we had a little bit of appreciation. I guess we should celebrate those little wins. Do we know what drove it? Is it sustainable? Is it, just, a fry in the pan?
I mean, at the moment, it's the Naira, like is quite volatile at the moment, and markets are actually watching today's meeting keenly to get cues, essentially to set expectations, to anchor expectations. And like we mentioned earlier, the expectations of a bold move, and they're also looking at, apart from just decisions on the benchmark interest rates, markets watchers are also looking out for, and investors are also looking out for other measures or strategies by the current central bank governor and the Monetary Policy Committee to try to stabilize the exchange rate market. For example, we've already started seeing some the central bank governor is trying to pay up those backlogs, which is kind of restoring market confidence. But I think what investors are actually just watching is to see what are the plans to anchor expectation. I think that's actually what is going on. There are big expectations for this meeting, and we hope that the central bank can deliver.
Hope that the central bank can deliver. But I mean, it's obvious that whatever decision they make today is not going to directly feed into the domestic commodities prices. That is still on an increase.
Obviously, we know for Nigeria that there's actually a weak monetary policy transmission between the monetary policy rates and then the impact on the markets. In addition, there's also a lag. But I think the biggest thing is just expectations. Like, Ine, we've not had a monetary policy meeting since I think July last year. And also this is the first meeting for Dr. Cardoso. So there are a lot of expectations. I think also we are already seeing some strategies here and there. We are seeing talks that, the central bank is going to increase the minimum capital requirements for bureau de change, which is hopefully expected to bring in some sanity into the market. So initially, I think that's just helping to set expectations might help stabilize the market a little bit. And then if the market positively views the strategies and the strategies of the central bank, then we might see some stabilization, and we might eventually begin to see some capital, some foreign dollars come into the country, because that is what we need at the moment. We need to set expectations, we need to stabilize the market, and then before we then begin to see some inflows of foreign dollars.
But I know I was having a conversation some time ago, and somebody said, well, there are some commodities that are locally grown, locally processed, and yet, we see it still being caught up in all of this hike in prices and connected to the exchange rate. And sometimes, it looks like, well, Nigerians are hurting themselves.
Yes, I remember the other day, many years ago, when I just started my career as an analyst, and there was, we're having this similar exchange rate issues, and I remember wanting to buy something like corn, and then the lady on the roadside said, oh, the price has gone up. I'm like, why? And she said, dollar. And I was almost asking the same question you're asking us. Come on, this is literally grown in your backyard. Why are you saying it's dollar? But in economics, we call it spillovers, right? So what is happening is the spillover effect of one, the first subsidy removal, but two, the drastically and sharply weakening exchange rates. Year on year, the exchange rate has weakened around 70% on the black market, and we are seeing the spillover effects on other commodities, or the indirect effects, and that is why we are seeing many other commodities, even domestic grown commodities, like you mentioned, are being caught up in this in the economic challenges facing the currency at the moment.
Yeah, and I think one of the biggest news we had yesterday was your Onsaya report for reorganization, MDAs, and all of. Do you see that having a? Because truth is, how old is this report? The realities of today, are they the same as at those years? Perhaps it will need to be touched up, to fit into today's reality before it can make impact.
Indeed, the report is 12 years old, and I think one thing is true. is that there's a need to streamline government. We know, we've been talking about it for time past, that government is too huge, it's too big. We have overlapping responsibilities, over duplications of roles and responsibilities, which not only increases the cost of governance, it actually crowds out investment. It crowds out, investment in critical areas like health, education, infrastructure, and social protection. And so I think the spirit of the report is still the same, in that there is a need to streamline government. I mean, look at even this current administration. We have, I think, record number of ministers. Under those ministries, we have permanent secretaries, we have the special advisor on this, senior special advisor, technical advisors, and all of that. So I think the idea or the spirit of the report is to kind of to merge those government parastatals that have duplicated, that duplicate their responsibilities, and to kind of streamline. So in the spirit, it is positive. Whether that would work, because it may imply, leaving some people of their duties, merging MDAs, merging ministries. Whether it would make any dent, or whether the savings from that would be transferred to critical areas, I think that's a big question. Already we know there's a deficit of trust in government. So I think we will just maintain the wait-and-see approach to see if that makes any significant difference.
Yeah, well, you can say that again. Big question right there, especially because the executive has promised that there'll be no job loss, so you wonder how they want to manage it. But thank you so much, Dr. Adesola Asimoni, for your time this morning, Senior Analyst with Financial Derivatives Company.
Thank you for having me.
All right, let's head to the markets now and have that's good news. Yesterday, NAFEX gained 9.51 naira. Talking about the naira to close the day at 1,584 naira 76 kobo for $1. The NAFEM traded actively with some market participants trading two-way, leading to price discovery. Remember, the central bank has said it is now on a willing buyer, willing seller rate. That's what's going on. So the naira gained yesterday about 82 naira 56 kobo to close at that rate. We tell you, well, it's expected that it will hover around this rate today, but we'll see what the decision at the MPC has to do with that. Let's go right there to the NGX. Yesterday, it was another negative trade for the NGX. It was down 0.09% and lost 51 billion naira, still hovering around 55 trillion, 55.8 trillion naira. That's was the closing market cap for yesterday. We see the drivers for that. We see the volume was green and all of that. So, well, it should be green because there was a deeper fall before now. Remember yesterday we had a sea of red when it comes to the activity. So we see recovery right there for the volume value and the deals. Deals now back to about 9,959. Let's see the drivers for that. Banking recovered a bit, 1.35%. Consumer goods wasn't able to. Industrial goods unchanged. Insurance recovered a bit from that dip fall it had, as I think it was 0.88%. It lost at the close of last week's trade. And oil and gas has been caught by the bug of profit taking, 0.37%. I think Standard Oil was one of those that dropped yesterday, about 9.9% at the close of trade. Let's see the other slides right there and see what we have. There you have the top trades, the Fugas, profit taking stayed on that banking counter. That's why we saw a drop. FBN, UBA, and Zenith Bank. And Zenith Bank was positive at intraday, but I guess then some investors noticed and decided to touch it. And so we have it. Well, let's go to the smaller unlisted market. That was also negative yesterday, 0.56%, 1,182.18. Market cap yesterday was 1.6 trillion naira. The activity chart was red. It was red, really red. Volume was down. Look at it. Look at that. I mean, that's a lot, almost 100% down for yesterday, but only 6 stocks traded in 31 deals. Let's go to the fixed income market. And so that the bond market opened the week on a relatively quiet note as most market participants traded cautiously ahead of today. Everybody's waiting for today. As the market progressed, it was observed that there was improved offers across board with emphasis right there on the June 2038 security caught some attention around there. But as I guess that Mr. Adebajo said earlier, investors are looking at the inflation number and comparing it with the yields. If I keep my money here for 1 year, for 2 years, for 90 days, at the close of it, at the maturity of that security, will I really be having value when I look at the rate of inflation? Major consideration for a lot of investors. So for the federal government bond, we had 20 deals worth 16.53 billion naira. Trades were consummated on the short end maturities because, the short end is just, okay, maybe I can manage. I don't know what's going to happen in a year. I don't know where inflation will be, at the year. But let's look at for the Treasury bill. There you go. 52 deals right there. And we can say that the Treasury bill secondary market recorded calm sentiment, also albeit with a bearish undertone as market players continue to trade with caution, also obviously because of the MPC today. And there we see that it was the February 2025 security that got a lot of attention, even more than the June 2024. I wonder what happened. We need to look at the yields of that. Well, 52 deals right there worth 68.79 billion naira. That's what we had for the Treasury bill. Look at Omo right there from the central bank. Only 8 deals worth 45.42 right there. And December 2024 was the most active right there. 8 deals on it. CSB had 19 deals worth 80 billion naira. So there you have it. All eyes looking at the CBN headquarters and seeing what's going to come out from those 12 individuals who are sitting down there and looking at major factors to see which way to lead the monetary policy too in the next couple of months. And we certainly are following them. So join us at 1 p.m. right here, and we'll bring you the conversations around before and after the decision. You don't want to miss it. Ladi will be here. I'll be here for part of it also, but let's do it together at 1 p.m. So over to you guys, Sunrise Daily.